Hey traders, this is Mike Sir here. If you've been monitoring the global financial markets lately, you probably heard about China's regulatory crackdown on everything from big tech companies to for-profit education companies and food delivery companies. Now this has caused $1 trillion in market value to be wiped out in the China stock market. Now while many China investors' portfolios are down significantly since the crackdown, does this pose an opportunity for you and other investors who believe in the long-term health of the China stock market? So in this video, I'm going to share my research on the China stock market with you, determine the risks, and see if this is an excellent opportunity to buy right now. Now please make sure you stay till the end of the video as I will analyze 3 China stocks that could have the potential to perform very, very well after this crackdown is over. So let's get started. Many people believe the start of the China crackdown was initiated by Jack Ma, the billionaire founder of the most successful company in China, Alibaba. Now for those who haven't heard of Alibaba, it's often referred to as the Amazon of China. On October 24, 2020, Jack was invited to give a speech at the Bund Finance Summit in Shanghai, China. This infamous speech dramatically changed Jack's billion-dollar fortune, and shortly afterwards led to the cancellation of Jack's fintech firm Ant Financial Group's listing on the stock market. At that time, it was due to list for a world record $37 billion deal that would value the company for more than $300 billion. So what Jack basically did during his speech was launch into a not-so-subtle attack of the Chinese government, calling the people who run the banks old men, and basically refer to them as out of touch. He called out the government's interference in businesses and how they were stifling companies' potential growth and innovation. Then he concluded by stating that China does not have sufficient experts to make policies that align with development. Now in the past, Jack has been very, very outspoken and known for his controversial speeches, but this time it appeared that he had finally crossed the line. To give you an idea of how bold he was at the summit, he delivered his fiery remarks against China's financial system to an audience which included many high-ranking China officials. For those who don't know about China's communist government, they are well known for not tolerating any criticism at all. In fact, all websites are censored and all communications are monitored within China. So for example, when I was traveling throughout China, I had to use a VPN, which is called a virtual private network, in order to access sites like Facebook and Google because they were all banned or blocked in China. In fact, President Xi Jinping especially doesn't like to be challenged. So ever since Jack Ma's speech, Communist Party officials have retaliated by targeting Jack's financial empire and other Chinese companies. Another sector that was targeted by the government is private for-profit tutoring companies. Now this once $120 billion private education industry triggered massive sell-off in shares of tutoring firms traded on the Hong Kong Stock Exchange and New York Stock Exchange. They include companies like New Oriental Education and Technology Group and Koolearn Technology Holding Limited. The reasons for the crackdown were to help ease the financial pressures on families that have contributed to alarmingly low birth rates and reassert the role of government-run schooling. But ultimately what this was really all about is control for the Communist Party. You see, their main priority is to prevent behavior amongst private or public companies that could engender more independence and potentially non-conformist activities, which undermines China's state-centric model. So this poses extremely high risk for investors who are looking for opportunities to invest in China, because you really don't know which industry the government is going to target next. With the regulatory crackdown in China causing the China stock market to decline substantially in value, this has presented investors with the opportunity to buy big-name stocks at a substantial discount. You see, China is still the second largest economy in the world, and in fact grew 18.3% in the first quarter of 2021 compared to the same quarter last year. Also, the country has largely been able to recover quickly from the pandemic and is attracting a new wave of capital flows from global investors who are looking for growth opportunities. There was a study done that by 2027, 1.2 billion Chinese will be in the middle class, which would make up 1/4 of the total world. In fact, China already makes up the largest middle-class consumption market segment in the world, and major multinational firms are targeting this fast-growing middle class. Now, there are a few publicly traded China companies that I've been doing my due diligence on and could offer a potential buying opportunity if you believe in the China growth story. Before we take a look at some opportunities in the China stocks, please take a moment to like this video. I would really appreciate your support. Okay, let me share with you some criteria on what kind of companies I'm targeting. And they essentially have to be the leader in their respective sector. They have to offer an essential product or service that everyone needs. They essentially have to be in an industry that China doesn't want it to fail. So based on the criteria, I've chosen 3 companies that I'm currently watching. The first one is Alibaba Group. They're a multinational technology company that operates one of the world's largest online retailers and e-commerce companies. They operate 3 main properties, Alibaba.com, Tmall.com, and Taobao.com. Now, if you buy anything online in China, you're probably buying it from one of Alibaba's online sites. They are also the largest cloud computing service platform in China. They are also one of the largest payment processors in China through Alipay, and they operate the 5th largest artificial intelligence company in the world. On any given day, you are using a product or service from the Alibaba Group. Alright, let's take a look at Alibaba's chart. Let's take a look at a longer term chart of Alibaba. So here's a chart from 2015 all the way to currently, and you can see that it hit a bottom around 2015 around $60, and I drew this, extended this trend line out. You can see here extended all the way out. You can see actually it broke this upward trend since 2015, broke around $200, and now it's fallen back to about $160 or so. You can see here there is a bit of a support here, and I wouldn't be surprised to see some type of a bounce here, especially given this big drop here. So what I'm going to do is I'm going to take a look at a daily chart now, so you can see a little bit more clear in terms of the time frame. So I drew this, extended this trend line here. You can see clearly it's on a downtrend here, and then it broke this upward trend around the $200 level. Now, one thing that I can probably see, again, I don't know what's going to happen with the China crackdown, but if you look purely just from a technical perspective, I suspect based on looking at the technicals that we'll see some type of a rebound. So you can see this big drop here. You can see the volume increase. And typically at a reversal, you'll see a lot of volume. And you can see the trading volume here is huge. And particularly here, you can see this is a candlestick pattern. This is a hammer formation, especially with large volume. You can see it jump up and then gap up here and then come back. And we're seeing this first green candle here. So what I'm looking at is this may be a support level right here around I'd say around 158. If it can hold above 158, I think Alibaba stock can probably target 200. So, but if you want to be a little bit more conservative, you can use a stop here around 152. So if you're looking to get in here at Alibaba, you can get in around here. If you want to be a little bit more aggressive, put your stop loss below 158. If you want to be a little bit more conservative, put your stop around 152 and shoot for a $200 price target. The second company that I'm looking at is the Industrial and Commercial Bank of China. So they're a multinational banking company and a state-owned commercial bank. They're the largest bank in the world in terms of total assets, reportedly at $4.3 trillion as of December 2020, and they are one of China's largest publicly traded company by market capitalization. Basically, this bank will not fail and is considered a systematically important bank by the Financial Stability Board. So if this bank fails, then we will have an even worse financial crisis than 2008. Okay, let's take a look at the chart. So here's a chart of ICBC from 2007 all the way to today. And what I did is I put a RSI indicator here, and there's a possible opportunity. You can see the RSI is very, very close to 30 here. And you can see that every time that it hit the RSI below 30, you can see it bounce. So you can see right here, went up higher. Here, you can see it went up higher. This case, this one actually went up a little bit, but came back down. But you can see the RSI has actually been quite reliable for this particular stock. You can see that every time it hit below here, it bounced up. So I'm suspecting this stock will also bounce. Drew a trend line here, extending here. So we're close to this line here. If the stock can go close to around $4, that would be the ideal. And you can see here I drew a trend line here. So it's basically trading in this kind of range here. Now I'm going to go into a daily chart a little bit closer so we can maybe see some details here. Okay, so you can see some stability here. It's bouncing off around the 430 mark. And if you're looking from a daily chart on the RSI, it's not showing. It's still low, but it's around 40, so it's not close to 30. So ideally, in terms of if you were looking to buy into this stock, ideally would be better if you buy closer to $4. But you can utilize this as a support level. This is a small minor support level around 430 as well. So looking at the bigger time frame, if you can buy as close to this line as possible, your target would be selling before this line here, which is around 560. The next company I want to profile is Tencent. They're also a multinational technology conglomerate in various internet-related services and products, but they're mainly known for the extremely popular messaging service called WeChat, which is used daily by the majority of people in China. So essentially, you can do anything in the super app, from messaging friends, paying your bills, buying groceries, and playing games. So basically, everyone in China has a WeChat account. They're also the world's largest video game vendor, and they own the majority of China's music services through Tencent Music. They also operate one of the largest web portals, QQ.com, and also they have one of the largest payment processors in China through WeChat Pay. So really similar to Alibaba, on any given day, you are using a product or service from the Tencent group. Okay, let's take a look at the Tencent chart. So here's a chart of Tencent from 2015 all the way to today's date. So you can see here, I start drawing a trend line from 2016. If you extend it all the way out, it actually hit this trend line right here and bounced off. So that's actually a good thing. So you can see that the uptrend still is intact since 2016. And I drew a line across here. This has been a level of support. It broke through it and now it's actually going above it. So that's also a good thing. Now the thing here you have to be careful is this trend line here. So it's extending down. So still it's short-term wise, it's actually still going down. Now if we were to go into a daily chart, so see a little bit more detailed, you can see that it bounced off this trend line right here. So if we go into a little bit more detail, especially right here, you can see it's actually just going sideways, 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 sideways. So what I think that you can look at is if it can break clearly above 495 and then clear this trend line here, which is a level of resistance. You can see extending here. So if you can clear 495, but ideally if it can clear 526, then it really has a potential to go much higher. And I wouldn't hit a high here of 774. I wouldn't target that. I would probably target around 626 here. Or the thing that you can do if you don't want to play the breakout here, or because of this level of resistance right here, You can wait for a little bit more of a pullback, hoping that it can test this trend line again around I say between 416 to 420. That would be another ideal entry point for you on the Tencent stock. I've only profiled 3 companies in this video, but there are literally hundreds of China publicly traded companies that are on sale right now due to the uncertain regulatory environment. So make sure you do your own due diligence on all these companies, as I'm not a financial advisor, nor is this a specific company recommendation. I'll see you guys in the next video.